Good afternoon. Welcome to the Chicago Money Show. We help you get informed, feel engaged, and have fun with your finances. I'm your host, Bridget Sullivan Mermel. I own a family financial planning practice in Chicago. Our guest today is Jordan Wishner. Jordan founded the Health Insurance Shoppe in 2009 in Roscoe Village. And, actually for years, people would ask me where to go for health insurance. And I found that most insurance agents don't want to help people with health insurance at all, much less specialize in health insurance. So when Jordan opened the Health Insurance Shoppe, I was really happy. We're going to talk today about helping you figure out if you should look at the marketplace, also known as ACA or Obamacare. And we'll also talk about changes in the marketplace plans, plus in Medicare and Medicare Advantage. We won't be talking as much about sorting through your employer insurance and employer benefit options, but I did recently release a video on my YouTube channel about open enrollment in companies. So if you have questions there, check out the Friends Talk Financial Planning YouTube channel. You can find that at youtube.com/c-Friends Talk Financial Planning. And today we're taking your calls for Jordan. If you're watching this live, call the number below and give us a good question. Okay, so Jordan, first of all, there's new tax credits available this year, so that means money. And of course, people want to know about that. Why don't you go over the new provisions for people who are using the marketplace to get tax credit?
All right. Well, first, thank you for having me. This is great. So earlier this year, the Biden administration passed the American Rescue. And what people know about that is that they got an advance payment child tax credit. They qualify. But in addition to that, as far as the marketplace goes in the Affordable Care Act, there was a new rule created that nobody, whether your income is at 400% of the federal poverty level, at 800% of the federal poverty level, if you shop on the marketplace, the cost of a benchmark silver plan in your area cannot exceed 8.5% of your income. And prior to the April 1st of this year, anybody that was above 400% of the federal poverty level didn't even qualify. And if you were between 300 to 400% of the poverty level, the requirements were that a plan couldn't exceed 9.6% of your income.
Okay.
So those who already had coverage on the marketplace, if they redid their application, they saw an increased tax credit. And those who weren't eligible before are now eligible.
Okay.
And they were able to reap the benefit as early as April, and they could begin to reap the benefit during this enrollment period for January.
So are you, let me see if I can ask a question about that. Say my employer offers a plan, but it seems like it's kind of expensive. Should I look on the marketplace?
It's a good question. There's employer plans, there's different breeds. You have employers who pay 100%, no cost to the employee, 80%, 50%. Some employers don't even pay a cost. But when your employer is sponsoring your health plan, the only time that you're going to be eligible for a tax credit on the marketplace is if that employer plan is greater than 9.6% of your income.
Okay.
Now, the cost of that plan is just on yourself. It doesn't take into consideration any spouses or dependents that may be covered under your employer. But if the cost of that plan is less than 9.61% of your income, it makes you and your family ineligible for any tax credits on the market.
Okay, so you're not going to save money on the marketplace in that case.
No,
okay.
And even if you found a plan that was cheaper, and you said, you want to know what, even without a tax credit, it's cheaper than my employer plan. The truth is that it's important to understand that an employer plan is being paid for with pre-tax income, where when you shop on the marketplace, it's post-tax income.
Right.
So depending on your tax bracket, it could equate to $100 or $300 difference once you put taxes into the picture.
Okay. So I got this question. I'm under 65. I'm looking at the marketplace. How do I even go about sorting this out? There's all kinds of carriers and plans and overwhelm. How? What's your basic approach?
My basic approach. Well, in the past, at the start of the Affordable Care Act, we had about 5 or 6 carriers, and it dwindled down to 3, and now we're back up to, I believe, 5 in Cook County. And out of those 5 carriers, 96% of the available plans are HMO, which is a change to the individual healthcare market. There's only 5 or 6 PPO plans available, and it's important to understand that these carriers, their networks, are geared to specific hospitals. So yes, there are more insurance carriers this year, but each carrier is different because they have a different provider network. For example, if you need access to Advocate Healthcare or any of the Advocate medical groups, your only option is a Blue Cross and Blue Shield HMO.
Okay.
And if you use Amita Health, which is a St. Joe's, St. Francis, and Lexington Brothers, you have multiple carriers that can include that network of physicians and hospitals.
Oh, okay. Interesting. Okay, great. So I got this question from a viewer. I've got a child going to college in another state. I need medical insurance for both of us. How would you approach this?
How would I approach it? When you look at the marketplace, and I just said 96% of those plans are HMOs.
Right.
HMOs don't provide out-of-network benefits out of your service area. So if you have a child in another state and you have them on your health plan, the only coverage you have is for emergency care. So it's important to look at the cost to have your dependent on your insurance against what the cost is to have the dependent covered under your school insurance plan, which in the end might be a better value, it might be better coverage for what they need. And it's also important to understand that when you deal with tax credits, the tax credits are based on your tax return.
Right.
And if that dependent, is working part-time at school, maybe they might not even be a tax dependent on your tax return. And if that's the case, then they wouldn't be able to be on the same plan with the parent if the parent qualifies for tax.
Oh, okay. All right. So you're saying look into separate plans for the child, perhaps.
The university.
Okay.
If the university is too expensive, then maybe you need to get a separate PPO plan.
Okay. And for where they're at. Okay, interesting. All right.
No, you choose one of the PPO plans and just have 2 separate plans for the mom and the child.
Okay, great. Is there anything else you want people to know about the marketplace this year?
It's important to log on and redo your application.
Okay.
Your tax credit will not get updated unless you redo your application, even if you're not updating your income.
Okay.
You need for the whole application process again to re-enroll.
And are they going to, but you don't have to worry about underwriting or getting denied. Is that correct?
The marketplace is guaranteed issue.
Okay.
It's essential health benefits. There to cover pre-existing medical conditions, maternity care, mental health, substance abuse, the whole 9 yards. The qualified health plan.
Okay. And what about health shares? That's another question I got from a viewer. Do you know much about those?
From a personal experience, no, I don't. I mean, they've been very popular since 2014 when the Affordable Care Act came out.
And so can you explain what they are for people? I might be able to give it a shot, but you probably can give a better explanation than I can.
A health share is where a community of people are paying a monthly service fee into a pool. And that pool that they're paying into is used to pay for their care when care comes. It's going to cover everything like a qualified healthcare plan will, but the funding of it is different. And it's a lower cost alternative to major medical insurance. And it becomes about affordability. And really, before the American Rescue Plan, if you're not qualifying for a tax credit, prices are very expensive for health insurance. And someone could maybe save $1,000 a month by doing the health, $12,000 a year. And maybe it might work out for them. They have no high-risk medical needs. That would be maybe better covered under a Blue Cross plan or something like that.
Okay.
But look, with the passing of the American Rescue Plan, a health share plan might not be necessary.
Right.
If you had that illustration of what the tax credits are, there's assistance there to make the Affordable Care Act more affordable, so where you might not have to go that route and go to a health share.
Okay, that makes sense. So we were talking before, it sounded like with people that make between, say, $18,000 and $30,000, that the regular health insurance is very affordable. And then there's some then it can get higher, and so that's where the health shares type plans might be seem appealing when you're pretty healthy. That's what I'm hearing you say.
Right. When you look at a health plan and you're not qualifying for significant assistance with premiums or with deductibles and out-of-pockets, you're looking at plans that have an $8,000 deductible. And you see that the plans aren't going to cover anything until you meet that $8,000. So with the health share, it's a little different because there are no deductibles. I got a network, the bill was $1,300. Well, I'm going to get $1,300 from the company to pay that bill. That was part of my.
Okay. And what about Cook County Health? Do you have any 2 cents on that? I'm thinking about alternatives to Blue Cross and Blue Shield. That's why I bring that up.
That's more Medicaid.
Okay, great. So that's for if you're not in the system.
So the marketplace in Illinois, the threshold is 138% of the federal poverty level.
Okay.
Which is about $18,000 for an individual and $27,000 for a family. And when you qualify for Medicaid, you have tons of insurance companies to choose from.
Okay.
More than what the Affordable Care Act used to offer before this passed. And you have plans from Blue Cross, Aetna, Cook County Health, and it's just what's going to work best for you and what your doctor expects.
Okay, great. And what about HSAs or health savings accounts? Now, that's a specific type of insurance that's available on the marketplace, and actually some people's employer plans as well. Who do you see that likes them?
HSA compatible plans. It's a health plan. It's a health plan, first and foremost. But if you go with that type of plan, you're allowed to establish a savings account where an individual could deposit, contribute up to $3,350 for the 2022 plan year, and up to $7,300 for a family. And the total that you put into that account is an above the line tax.
Right.
And without that account, the only way that you can deduct your medical expenses is on the amounts that are greater than 10% of your income, which for high income earners, they might not be able to deduct that without an HSA. But when you're looking at the plans on the marketplace and you look at plans that are just the same premium as an HSA, the HSA plan is going to offer you the lower individual maximum out of pocket. Meaning that the illnesses that we don't want to discuss, that's when you satisfy a plan's maximum out of pocket. In an HSA plan, just the medical plan itself offers a lower maximum out of pocket by almost $2,000.
Interesting.
And in addition, you could pay for that. If you're an individual, you could pay for up to $3,350 of that out of pocket tax free.
Right.
Which is even lowering your total exposure, on bills that we can't afford. But the biggest distractor to an HSA plan for individuals that get coverage on the marketplace is that there are no first dollar benefits, such as an office visit copay or copay for prescription drugs. And consumers might look at that and say, well, if there's not a copay, I don't know the cost to go to the doctor, then I'm not going to go to the doctor because they think it might cost thousands of dollars, when truth is that going to the doctor is pretty affordable when you have insurance without a copay. But when you don't know the cost, you're not going to think towards an HSA plan.
Right.
Because in the end, you're more concerned about the cost to go to the doctor than what the cost is when faced with a 5-day hospitalization.
Yeah. So this is it's interesting because I've had an HSA since they came out, and I had the predecessor plan before that. And it's true, you don't know what the cost is when you go to the doctor, but it's reasonable. It's cheaper than I would think. It's not. It's not.
Correct.
Yeah.
You know,
And then there's the out-of-pocket max. So if it isn't reasonable, then it hits the max and it's over. I don't have to pay any more that year.
You know, everybody's different, and they look at insurance
Mm-hmm.
Some people look at it to lower their cost at time of service.
Right.
And if you look at that, then an HSA plan is not for them. And they want to pay more money to have the insurance company pay the doctors, so it costs them less at time of service. And each person is different. You know, sometimes if you're a business owner and you have to get your coverage individually because you're one person corporation, well, your corporation won't, you know, an HSA won't make sense for you.
Right.
But that's, you know, a different story, you know, on HSAs as a whole and how they fit into the picture.
Cool. Like, you know what? Let's switch over to Medicare. All right.
Sure.
And so first, I want to talk about the basics. And I'm going to try to tell you what I think the basics are. Okay. And so you can tell me if this is right or not. All right. So when you turn 65 and you don't work for an employer that's got 20 employees that has health insurance, you've got to enroll in 6 months or else you get a penalty. You're subject to a penalty. And
Correct.
that's in Part B. And then
Correct.
you have to get the drug benefit within 3 months after that.
Or
penalty. So you got to, don't blow this off. You have to deal with, you turn 65, and unless you've got health insurance for your employer, engage. Okay. So now let's say we've gotten over that hurdle.
Mm-hmm.
Let's talk first about Medicare Part D, the prescription drug.
Yeah.
You can check them each year. And you can change, this is something you told me I thought was really interesting. You can change them with no underwriting, so nobody's going to ask you any questions. And Medicare.gov is a great resource. That's a great place to go. You can put all, you know, you can enter all your drugs and then see, okay, how much is all this going to cost? And which plan's the best? Because that can change depending on what your situation is. Okay.
Correct. We'll go for it.
So that's the basic. and then there's the Medigap, which people buy because they want to have some insurance for what these other two plans don't cover. I call it Medigap. Some people call it Medicare Supplement.
Right.
Okay.
It's understanding what Medicare is.
Right.
And there's different parts. You have Medicare Part A, which is for the hospital, and you have Medicare Part B, which is for the doctor. A is free. B costs a premium that you pay to the government every month, or you have deducted from your Social Security check. And then you have Part D, which is prescription coverage. And you need Part B to get the prescription coverage. Now, original Medicare Part A and Part B is insurance on its own, but it leaves the beneficiary to pay out of pocket. And for hospitalization, you can pay up to $1,484 for the first 7 days in the hospital. Or for a doctor visit, you have to pay the first $203, which is Part B deductible. And then you're on the hook for 20% of what Medicare approves. And, you know, these Medicare Part A, Part B, it's not private insurance.
Right.
It's government insurance. There's not a network of doctors other than doctors who participate in Medicare.
They don't. Right.
And if you get a Medicare supplement, a Medigap plan, that's there to pay what original Medicare Part A and Part B leave the beneficiary to pay. Part A deductible, Part B deductible, and the 20%. And that's also going to require you to get a separate prescription drug plan. And so you have an insurance card for your drugs, an insurance card for your supplement, and then you have your Medicare card. And whether you go with a company like Blue Cross, Mutual of Omaha, AARP, you're not asking your doctor if they accept AARP or Blue Cross. You're asking your doctor if you accept Medicare. And if they accept Medicare, then the supplement, the Medigap plan is going to pay.
All right. So what about, so tell me, what's the number one thing you want people to understand about Medigap or the Medicare supplement?
So this annual enrollment period that you see on TV, you hear on the news, It does not involve your Medicare supplement. Medicare supplements, you can apply for at any time of the year. You can change plans at any time of the year. This open enrollment period is for those who are enrolled in prescription drug plans and Medicare Advantage plans, because it's the one time a year that you could change your plan. Medicare supplement, anytime. If you're unhappy with so-and-so, you could go to another carrier and
Okay.
and your rates don't change in January anyway. So it's really just for the prescription drugs and the Medicare Advantage plan. So I talked about Medigap. Well, Medicare Advantage, that's a private plan of insurance.
Okay, so the difference between Medicare Advantage and Medigap.
Is that
Tell me about that.
Medigap is there to help you pay for what original Medicare leaves the beneficiary to pay. Medicare Advantage plans is a replacement of original Medicare and includes prescription drug coverage and is with a private insurance carrier, meaning that you now have a network of doctors that you have to utilize.
Okay, so we've got a call. Caller, if you could tell us your first name and your neighborhood, and then let us know your question.
Hi, I'm Leslie from Irving Park. Question about this whole enrollment period, and I think it's probably related to Medicare.gov. But there's all these commercials now with "Don't Name It" and all these old celebrities, and they're selling Medicare. You can find out about your plans and the benefits you're not getting. What are those companies doing? Are they
I love that question.
charging me services for like the same thing I would get if I went to Medicare.gov?
It's the same exact plan.
Does that make
correct?
sense?
So it's the same thing. They're just advertised.
It's a large agency. So figure, I'm the Health Insurance Shoppe. Say I had 1,000 insurance agents in my office, and because of how big I am of an agency, I represent 20 to 25 insurance carriers, and we specialize in Medicare Advantage plans. And we want you to call because some plans have new benefits that you might not be getting with your current plan. Maybe you have a Blue Cross Medicare Advantage plan, but there's this Medicare Advantage plan with Bright Health that's going to offer a better dental plan, and maybe it's going to pay part of your Part B premium. A lot of these plans now, they're beginning to reduce what beneficiary pays for Medicare Part B. But when you hear those commercials, the one thing that is definitely constant is that those plans are at no cost.
Right.
It's a zero premium plan.
So are you saying, these are Medicare Advantage commercials for brokers that handle different Medicare Advantage plans, but it's not going to cost you more or less than if you go to Medicare.gov. Is that correct?
Correct.
Okay,
correct. It's just that Medicare.gov, you're not working with somebody. You're working with a computer where if you call that number, you have somebody on the phone.
Okay, great.
But it's important to understand that those plans might sound great, no premium. It's got the dental, it's got the vision, it's got all these benefits that my Medicare Advantage plan that's costing me $80 a month doesn't have, but what's the catch? Well, maybe mine is a PPO Medicare Advantage. This is an HMO.
Right.
It doesn't have out-of-network benefits. Mm-hmm. And it requires me to use this specific list of hospitals and these doctors. So it's understanding if it's going to be a fit. For example, I'll just use Blue Cross. They have an HMO that's specific to advocates in Medicare Advantage. Not for everybody. It's only for somebody who is comfortable enough that advocate is their place of care. Because if they wanted to go to University of Chicago, they want to go to Rush because they heard this doctor is great over there, they can't.
Right.
Because their plan doesn't provide out-of-network benefits. So you got to read between the fine lines and make sure you understand what's being offered to you and what you're getting.
Okay, so tell me, it seems like there's something new with Medicare Advantage options that can say that people should investigate. They might be able to save a bunch of money. Is there something like that?
Yes. In the past, Medicare Advantage plans, when they came out, they were mainly HMO. And that's changed. You have PPOs now, and you have large PPO networks, where, the point of someone enrolling in a Medicare supplement plan or a Medigap plan is that they know that if the doctor accepts Medicare, it's going to work. And they know that the top hospitals in Chicago, they all accept Medicare. Where some Medicare Advantage plans don't include them, but now they do. And if you're holding on to a Medicare supplement because you have access to those doctors in the hospitals, you don't need to do that anymore. Medicare Advantage plans have national networks, huge local networks. And new this year, they have plans that are geared towards, the older population. I'd say anybody between the age of 75 and above, who are paying $300 to $350 a month for their Medicare supplement. They have no out-of-pocket. Well, here's a Medicare Advantage plan at $189 that still has no out-of-pocket, that includes your doctors, includes your hospitals. It's time to check out your options. And it goes the same for someone who's been on the same drug plan for 5-6 years, because they're not used to making a change, and they could be overpaying by $1,000 to $2,000 a year compared to a new insurance.
Yeah, that's interesting though, because what I see with older population is that sometimes when people are over 70, approaching 75, they might need some help to even know about it, be interested in doing it, get on the computer and, and navigate. And so this seems like something to me that's a good opportunity for people, for, your kids or grandkids to say, hey, did you hear about this? Do you want me to help you walk through this?
Correct. I'll use my uncle as an example. He's 75. He's had the same drug plan since I think maybe 67, when he became eligible to get off his employer plan. He was paying $90 a month, and it worked out. It covers his drugs, and he never thought, once about changing. And I decided to get involved. We found a plan for $11.70 a month that covers his drugs, no different than the $90 plan. And the beauty of it is that if you're unhappy with the new plan, you could change the following year. It covers your drugs. If money is important and I could save you some money, let's do it.
Yeah.
Because if you're being unhappy, then we'll change the next year. That's the beauty of it. And that's what Medicare.gov is designed to do for drugs.
Awesome.
Who offers you the lowest out of pocket.
That's awesome. So thank you, Jordan Wishner of the Health Insurance Shoppe, for being my guest on the show today. My name is Bridget Sullivan Mermel, and I own a fee-only financial planning firm. If you've got questions on this episode or for future episodes, please email us. We're at ask@chicagomoneyshow.com. Thanks for watching.